What's going on, traders? We're going to get right into today's video. No extra fluff, no indicators, no trend lines. You know we talk price action here on this channel. Now, before we dive into the dollar index and go over some setups that could definitely play out to end off 2020, this is pretty much the last full trading week of the year. So I know a lot of people, especially the institutions, are getting in and getting out by the end of this week. There'll be a little volatility next week, but let's take a peek at that over here on the economic calendar. So probably a normal Monday, Tuesday, regular volatility in the markets. And as we move into Wednesday, you're going to see some euro pound news for London. We have the federal funds rate, FOMC statement for the dollar Wednesday afternoon, followed by the Australian dollar unemployment rate. So Wednesday is jam-packed. We also got the OPEC meetings all day. So Wednesday going into Thursday, pound news in the morning, official bank rate statements, monetary policy for the yen throughout the day, and then Friday's pretty normal. So again, most of everything this week is going to be going on Wednesday, Thursday, Friday, like usual, nothing different. And as we move into the holiday week, again, maybe a little volatility Tuesday, Wednesday, but other than that, I know most individuals are going to be solidifying what they've done this year at the end of this week. So we should be in that same mindset, correct? So let's go ahead and dive over to the dollar index. Now, why do we look at the index? Because when we trade majors, it's going to have a high correlation to it. And if you remember 2 months ago, I have a video, Death of the Dollar, and that's exactly what we've seen over the last 2 months. Why? Wyckoff distribution, we were trending down, right? We were trending down into this area of imbalance over here that we've now effectively traded into. So now that I've pointed all that out, what really catches my eye on the weekly is this last down candle over here. And that's because the open of this down candle actually lies right here at that whole price of 90. So if I want to continue the bearish bias for the dollar index, and again, there's nothing telling us that this wants to be bullish, I would love to see this price move towards 90 this week. Now for the weekly, that's all I want to do. As I knock down timeframes, I just want to continue to confluence the bearish bias, right? And we want to see, where could we possibly position ourselves to go ahead and take advantage of this bearish bias this week. So let's knock down into the daily, right? You guys should see the beautiful Wyckoff liquidity, run high, trade low. We come and trade back into that open candle and trade lower. So on the daily, everything's looking great. There's no big imbalance areas. Everything's been retraced back into by these wicks. So again, just everything's looking very, very bearish, especially with even today's price action. As you can see, we're kind of creating this smaller pool of liquidity above our higher time frame bias target. So right now, everything's looking great to continue the bearish bias. There's nothing really more I'm going to do on the daily chart. There's no IT candles. There's no extra, imbalances that I can point out. So let's go down into the 4-hour. And again, we're not exactly taking trades on the dollar index, but you're going to want to use it to help you correlate with any other majors that you may be trading. So as you see, I'm going to move this little money trend line up right at the end of the day. Any trend lines that you see on my screen, it's pretty much just a pool of money, right? They're creating all these buyers right here off of 90.50. Now, obviously, since price action opened up on Sunday, we've traded down. Now, is there possibilities of the market coming and trading up into the gap that we opened up the week? Absolutely. Could that call for maybe a high probability sell setup if you were to sell, set like a stop up here and then, come target 90? Yeah, that's exactly what I want to look for. Now, again, are we taking trades based on this? No, but you got to think in your back of your mind, okay, we started off the week bearish. We could possibly have just like a small bullish pullback to continue that bearish action. Now, the market could also just absolutely sell off from where it's at. It doesn't need to reprice up here. So again, everything right now is showing me a continued bearish bias, right? Even if we look at the distribution, right? We had this up candle, we came back and retraced into it, right? If we want to talk, Fibonacci stuff, you run it from the high to this low, right? You had that 70% retracement. And this is also something kind of cool that I just remembered on the weekly. And we look here, we're getting close to, if we take it from this low to this high, we're getting close to, see how that 88 lines right up with 90? just an extra confluence for you guys. I'm not going to do much on the hour. Again, everything is showing bearish bias. As you see, they did throw a wick down here this morning. So again, is there possibilities of the market coming up and retracing up into here? Absolutely, but it doesn't have to. So again, bearish bias on the dollar. So we're going to take this into our other majors and figure out what we got going on this week. So let's take a peek at GBPUSD. We'll pop back on the weekly. And this weekly is pretty much going to be the opposite of what the dollar looks like. And that's the beautiful thing about it. We're bearish on the dollar. And now you guys can see beautiful price action from GU, right? Liquidity sweep, right? Retest, and we're trading up. So what are we doing right now on GU? We're pretty much making this huge pool of liquidity to the upside, right? Bearish dollar, bullish GBPUSD, because the dollar's on the back end. So right now we have this huge pool of liquidity. We have this huge pool of imbalance over here that's literally been here since April of 2018. This is what I want to be looking for. Now, as we look into the downside on the weekly, you know, everything's been nicely retraced back into, so not a lot going on. Don't want to do too much higher time frame for you guys. As we go down to the daily, again, just clean price action. We've had wicks come down and retest anything that we need. Even last week, right, we had this last down candle. So if you were to, you know, maybe be looking at like at the 50% of this or whatnot, you can see that they successfully mitigated this price on Friday. And now we're continuing to trade up because this is where the majority of the money is. So I'm going to go ahead and delete this line. I'm just going to go ahead and put a little money sign up here so we know. Now, even though, yes, like, you know, this was a clean, smaller time frame distribution, right? Candle up, trade lower below the liquidity as we trace back up. Again, there's just so many different confirmations. I'd even put the fib on one of the other confirmations. But as you get that deep retracement, you're going to be able to take advantage of these trades. Now, for this week specifically, I see something very beautiful here, right? Like we said, what do we want the dollar to do? We want the dollar to go up and continue down. So it makes sense that GU is giving the opposite setup. Look, we have this gap in price from when it opened yesterday. We have this beautiful down candle that, again, was a mitigation play on a higher time frame. So what we could be doing here, and let me change the color, right? All we got to do is wait for a pullback into this area, right? Let's talk fibs. I'm really loving the fib this morning, I guess. As we bring it from the low to the high, look where this lines up. Look for your 61, 70, 79, right? Deep retracements into here. So again, dollar bullish to bearish, GU bearish to bullish to go ahead and take out this money this week. But, you know, again, this is just a very broad, you know, opening for this pair. So let's go ahead and dive into it a little bit more. All right, now as you see here, you see the fast move down that they did. Let me go ahead and set that behind. Right, let's go ahead and make a new little imbalance. I actually grabbed my little tool here. Right, we pretty much left that open there. So even though price has been really clean, right, we open, we trade lower, right, we did this down candle, we trade up. As you can see, they successfully mitigated that down candle here and continued up through London. What did they continue up into London through? This imbalance area that they just successfully traded into on a smaller time frame. I'm sure this is a beautiful smaller schematic. And again, like, this is all you have to do. I've trained my eye enough over the last 3 years that this is all I see. I don't need indicators. I don't need any extra trend lines or foo-foo. I'm literally waiting for price action to get to these key levels. And I haven't even pointed out any quarters theory stuff yet. We got 3250 sitting here. That could be really nice. Do we need to dip in here? No, right? We could stop. We can maybe, you know, stop here on this imbalance, but this is what you have to understand. If you're taking a buy setup here, don't have your stop anywhere deeper than this, because if it stops you out here, let the market trade down in here, right? Or you just don't take this setup and you wait for the deeper retracement. It's all about your risk to reward, right? 5-to-1 risk to reward here. If I'm loving it, I might take it, right? If the dollar doesn't need to, you know, be bullish anymore, you're going to be good. But this is kind of what I'm looking at for GU. This is looking pretty nice. I would love just maybe a deeper pullback here between 3350, maybe 3300, and maybe get something in there. Not too worried about this. Again, off of this sell position on Friday, you can see that they found support over London Asian session last night and continued up. So overall, I think we're going to target this. Let's do some smaller time frame stuff. Just check out what's going on. Because again, I mean, it is beautiful, right? Market opens, we trade lower, right? What do we make? We make that one down push. We come and trade up above, right? And what do we do to this candle? We come back, retest it, mitigate, break even, and we trade higher. What happens when we get up here? We make a pool of liquidity in late London. I'm going to go down to a smaller time frame just to show you guys how fractal this market is, right? Look, smaller time frame. What do? One candle pushes above, right? Pushes above the liquidity, and now we've successfully traded down and pretty much, you know, creating some equal pools of money down here as well now. So, you know, hey, even though we're bullish on this pair, remembering to start the week, we could be seeing a little bit of a bullish dollar. So it wouldn't not make sense if the market were to come back up in here, right? Maybe trade into some of this imbalance area, right? You have a stop up above this candle. You target whatever risk to reward you want to do. And again, you know, you're risking anywhere between 10 to 20 pips, and you're looking for at least a 3-to-1 ratio when you're taking this. You know, maybe it's the 50% of this down candle over here. So that's kind of what I'm looking at for GU. That's actually really nice. Overall bullish. Could have some short-term sell setups, but I'm going to stay out of the market for this Monday and really start taking a look at things as we roll into Tuesday. All right, so let's go ahead and stick to the majors. Let's take a look at UCAD. Got a little change of scenery. Had to switch around a couple things this morning, so we're making the second half of this video a little later on in the day. As we look at USDCAD, right, we've just been free falling along with the bearish dollar. Now, go ahead and mark out the lowest point that the market has made. And what we want to do is now we want to go look left to get right. Since we have no price action to base anything off of if we continue to be bearish, we need to go look at this impulse up. So we're going to go ahead and knock down to the 4-hour and go inspect what has happened over here. And this should give us a better tale of what to expect this week. So as we dive into this impulse up, you can see how beautiful this schematic was, right? We got equal pool of money. We had a candle run down. We successfully mitigated the 50% of this down candle. And then again, we successfully mitigated the open of this down candle. Now, we didn't quite get the open of this one here, but as you can see, they did try to reach back. So where my main focus is going to be is not only the 50% of this, but you can see a little bit of imbalance laying right below that lowest point that the market has made. See this imbalance in here. So now as we go back to where price is at now, you can see how beautifully they found support at the top of that imbalance. So let me go ahead and get rid of that blue line. So definitely want to see the market continue to trade down into these two areas, but let's go ahead and knock down on the hour to look for some stuff this week. Now, again, with the possibility of some bullish retracement for the dollar, everything's looking great here. We have this nice last down candle before an up move that went on this morning. So this could present a short-term buy opportunity, right? Stop up underneath the low. And what are we going to target? We're going to target liquidity and we're going to target imbalance. So what do we have here? An equal pool of money. What lies above this money? We got a little pool of imbalance right here. We'll go ahead and change that to purple. Again, what do we have? Liquidity up here. What's above the liquidity? And again, a lot of the times you guys are going to see they play with each other, right? We got liquidity, imbalance, liquidity, imbalance, liquidity, imbalance. So this is really all you need to look for. Just look for your institutional candles and imbalances and wait for that deep retracement and go ahead and take your trade setup. Maybe you don't want to be bullish on UCAD. Maybe you wait for one of these sell positions. It all depends on your risk to reward, right? If we were to wait for that Monday, Tuesday bullish price action, then you could just wait for the sell setup. Maybe here at 28.50, right? A nice half level right there. What are we going to target? Maybe this imbalance. Look, you're already looking at an 8-to-1. So it all depends on what you want to wait for. Maybe you take the beginning of the week buy and play it into the end of the week sell. So that's really it for UCAD. I don't be trading UCAD too much. Let's take a peek at gold. Let's take a peek at gold. Now, as we look at the 4-hour, we've pretty much been in a consolidation area here. And again, I hope that your eyes are trained to see this big area of imbalance hanging out down here. And then we also have the bigger area of imbalance hanging out up here. So again, right now we're kind of playing in this range. So lower target, higher target. Let's go down in the hour, look at more of what could go on this week. So now as we go into this week, what do we see? So I see a really nice pool of liquidity hanging out right here, right? Pool of money. What lies above the pool of money? We got an imbalance hanging out here. What's above the imbalance? We have the institutional candle, the 1, 2, 3 punch. That's everything you want to look for. And now you just wait for the market to get there, and you can take that setup, right? Stop up above the high. What do you want to target? You want to target any other imbalances. Now, as we look left, right, here's an imbalance, but that has already been filled. So that's no longer valid. This has already been filled. So this is where you're really going to want to start targeting, right down here, or even this lower liquidity. So that's pretty much it for the dollar correlated pairs. I'm not really going to go into the indexes here. As you see, a very nice fat sell-off to start off the week. Again, these just hit all-time highs. So I'm not quite bearish on these yet, but that is coming up. So that will be coming in a later video. Maybe we'll see a nicer setup on these coming out later on this week. As you can see, this retracement back up today kind of mitigated a little bit of what was going on last week. So more to come later on. I'll make another video on this. And since we're a little later on in the day, I do want to show what happened with GU here, because we were talking about this right at the beginning of this video. As I go down in the 15-minute chart, we were talking about, hey, bearish action. Now, if the market comes and plays back into what? This little area of imbalance, we could see that push up. Now, again, was it the right time of day? 10:45 in the morning? Maybe, right? You maybe could have caught these little bit 33.17 to 33.53, right? A nice 30, 40 pips. But really, I wouldn't have taken a trade that, late into New York, especially on a Monday. So we want to continue to let this play out. But the thing is you got to understand, look, like, it's not by accident that the market found support right here. It's because of this sell to buy action, fill the imbalance, and now they're just going to trickle out. So definitely want to see the market pull back a little bit more. And I think that's pretty much our setups for this week. So I hope you guys enjoyed this video. Expect some price action studies. I'm going to be recording trades that I take Tuesday morning, Wednesday morning, Thursday morning this week. So I really would love to upload boom, 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 5 straight days of videos here on YouTube. So you guys can go ahead and see me entering as price enters that institutional entry, and you watch me manage my risk just like I've done in other videos in the past. So I appreciate you guys for checking out this video. Make sure you smash the like button. And a lot of you are not subscribed. If you've watched this long in the video and you aren't subscribed, that upsets me a little bit, but that's okay. Maybe I'll get you one day. So love you guys. Let's get it. Catch you later this week.